Here's a story I think you'll really enjoy. It's a HECM for Purchase success story from a recent NORMLA post last week. Michael and Tanya Berrigan, age 67 and 63 respectively, recently moved from Arizona to South Carolina's Low Country to help complete their professional careers, but also to position themselves for retirement in a very specific area, a highly sought-after 55-plus retirement community called Latitude Margaritaville. Fun name, near Hilton Head. Now they're living in their newly constructed dream home, and thanks to a HECM for Purchase, because it doesn't require a monthly mortgage payment. So this is a transaction story. I think it's really important, and it just shows the potential of the H4P. Now, Michael spent the early part of his career working as a contractor for the Advanced Research Projects Agency. If you've heard of DARPA, they developed cutting-edge technologies that you may be familiar with, such as GPS, weather satellites, and most notably, the internet. Now, I was a field service engineer, said Michael, and I worked in sales support, adds Tanya. In 2022, they began to search for a new place to settle in their retirement years. While perusing Latitude Margaritaville's Hilton Head Retirement Community Facebook group, Tanya came across a notice by a local realtor and a reverse mortgage specialist, Jim Davidson, with Mutual of Omaha Mortgage. After that, they decided to utilize a HECM for Purchase to move into their new retirement home in South Carolina. Davidson answered all their questions about the HECM for Purchase process, but here's a really important part. While the pre-closing work was being done, he did it remotely, Davidson did with the Berrigans, because they were still in Arizona before the move, so he's lining everything up. In the Berrigans' case, the price for their new retirement home near Hilton Head was $563,000. They brought $361,000 of a down payment to the closing table, which is roughly about 64% of the home's purchase price, while they still financed the remaining $201,000 with the HECM for Purchase reverse mortgage. Now, here's something to note about the HECM for Purchase. Had the Berrigans taken the typical route that most older home buyers do, they would have most likely sunken all or at least most of their loan proceeds from the sale of their previous home into the new house that they just bought. Now, such a strategy, while it will avoid a new mortgage balance, it does leave the homeowner with little or no cash from their previous home, and that restricts their cash liquidity. So important in retirement. We're grateful for the reverse mortgage and to Jim for assisting us, says Tanya. This will be our final home, and it couldn't be in a better location. We're very happy. So congratulations, first of all, to the Berrigans on their new dream retirement home, and also to Jim Davidson for helping provide a smooth and efficient home buying experience. Here at HECM World, we have discussed the potential impacts of a second Trump administration on the reverse mortgage industry and also on housing policy at large. But what does our industry's trade association think? To answer that question, we go to a recent column by Housing Wire's Reverse Mortgage Daily's Chris Clow, who interviewed National Reverse Mortgage Lenders Association President Steve Irwin. There is a change in the administration and a change in the control of the House of Representatives and the Senate coming, said Irwin. But as I've said before, housing issues run deep and they cut across party lines. We know that part of the Republican Party's published platform is a desire to support policies that help seniors to remain in their homes and maintain financial security. One reason that Irwin is optimistic about what that could mean for the HECM program is because it also fits the broader goals of serving older Americans. A good point. Irwin explained, for the right individuals at the right time and under the right circumstances, that is the FHA-insured HECM program. NORMLA has always remained close and developed relationships on Capitol Hill on both sides of the aisle, and we will continue to do so with this change. Now, one area we need to watch is the new leadership in the Senate Banking Committee, said Irwin. I've already had 2 meetings on Capitol Hill on the HECM program. With those meetings, I intend to ensure continued support for this critically important program, and it's by all accounts there. Good news. So what potential changes could the Trump administration spring on us? Well, 2 of the more notable ones are regional HECM limits and the elimination of HECM to HECM refinances. But both of those were endorsed by the first Trump administration and the Biden administration. Now, the industry, with NORMLA playing a leading role, successfully lobbied for a national loan limit for the HECM program in the mid-2000s. That was a big benefit. Regional loan limits for the HECM program will be something we absolutely oppose, said Irwin, should the proposal reemerge in a second Trump administration. The cost of durable goods and home repair or modification so that an older homeowner might effectively age in place is the same wherever you live. Regional limits, Irwin argues, is a forward mortgage concept. Irwin notes that a senior living on a fixed income faces expenses that don't adjust regionally, and there's no reason for a regional loan limit for the program. And he says he doesn't see it going anywhere, but absolutely they would be opposing any issue that would make that a possibility for us. Adding, if the Trump administration revives a proposed elimination of HECM to HECM refinances, Irwin said that that is also something that they could not support. Adding, why should any administration oppose the choice of the homeowner or consumer to take advantage of additional equity that may be available or because of lower interest rates? On an interesting note, Irwin added, I do think there are opportunities to re-examine the initial mortgage insurance premium structure on refinance activity. Absolutely. And I look forward to having those conversations with HUD. And in this segment, we're back with our monthly Reverse Market Insight Market Minute with John McCue. We're glad to have our friend John back here to let us know what's going on regionally and nationally with HECM endorsements and trends. John, thank you for being here. Take it away.
Thanks, Shannon, for having me back again, and Happy New Year to you and to all of our listeners here. Just as every month, we would like to start this month with case number assignments. So we're going to be looking at October numbers as they are the most current, both in case numbers and endorsement numbers. So looking at case number assignments, October case numbers rose by 17% to 4,331. New equity takeout grew by over 17% to 3,399. Purchase declined by 7.2% to 167, while refinances had their fifth straight gain in October. They actually surged another 19.3% from September to 765. Now, October outperformed September across all categories except for purchase. The most pronounced increases were obviously in refinances and new equity takeout, which were obviously the driving forces behind the popping case numbers for the month. For the year, October marks a clear peak in application activity, mainly driven by demand for new equity takeout and HECM refinances. Due to the continued gains in applications for the past few months, we'll continue to see endorsements grow through the end of this year and most likely into the first month or two of 2025. October endorsements jumped 11.3% to 2,392 loans. Only the Southwest Caribbean region declined as far as all the 10 regions that we track. The Great Plains remains the smallest region by volume, but it actually grew by 40.7% last month, while the Rocky Mountains was just behind, rising 39.3% to 241 loans. The Midwest gained 34% with 209 loans, and the Southwest rose 22% to 270 loans. As far as the overall performances by channel, we can see that retail grew by 6.7%. Wholesale really took off with a growth of 18.6% to give us a total endorsement growth of 11.3%. When we look at the top 10 lenders, we can see 5 of the top 10 showed growth, with Longbridge rocketed 51.6% to 482 loans. Good Life TMAC added 50.5% to 137 loans, and Fairway picked up another 31% to finish with 114 loans. With such a strong month for both case numbers and endorsements, it's a bit surprising that only half the top 10 lenders had a gain in endorsements for the October. But this would also account for the steep increase when you think about it with that wholesale broker channel, which we saw of 18.6%. As I mentioned earlier, given the large increase in case numbers in October and overall upward trend of case numbers for the past few months, we'll continue to see endorsements increase throughout the end of the year. In fact, that increase may even spill into 2025 some. However, with the continuing rise with the 10-year CMT, we'll have to wait and see if the industry's figured out a way to push through high interest rates, or will case numbers and endorsements fall in early 2025. So continue tuning each month as we follow the numbers to the end of the year and into 2025.
And that concludes our first HECM podcast of 2025, but we've been here much longer, so I want to thank you for being a supporter for all these years. Also, don't forget we do have an audio version of this podcast, which you can find on Apple Music, Spotify, and on podbean.com. Thank you so much for stopping by, and be sure to return next week for more reverse mortgage news for the mortgage professional. Have a great week.